Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the gold charts. Just before I start today's video, for anyone who's interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I've left the website link in the description of today's video, and you'll see that I only charge a very small fee of $29.99. But let's talk about the gold markets. Gold for a second day in a row now is trading towards the downside. I just want to clarify that yesterday I did mention that I myself and my signal team have entered a short position in the gold markets. I'm not going to tell you where I take profit and stop losses, but we are bearish on the gold markets. Those who've been watching my videos for the past couple of weeks and months, you'll know that I am extremely bearish on gold medium to longer term. And there may be some investors here who really like gold and think that it's going up to 2,500, 3,000, and that's absolutely fine. That's what this is all about. I like a healthy debate, but personally, from my own perspective, I really do not like gold here. Everything has gone right in the past 2 years for gold to go and achieve that 2,500, 3,000 price levels. Let's just start off with the stimulus. We've had trillions of dollars pumped into the the top economies of the world, that being the US, the UK, Europe, etc., in terms of stimulus checks, business grants, you have it. And of course, as well as that, we've had furlough schemes. And then on top, we've had COVID, we've had record unemployment, and just to kind of top it all off, we've just had a potential World War III happening between Ukraine and Russia. So everything there is screaming at gold to surge high. And sure, we did go and achieve a brand new all-time high in August 2021, and then of course this year we did go and retest those all-time highs, but we have been rejected. And at this moment in time, we currently find ourselves trading at 1810. My sell position is currently in profit. If you are watching this video and you want to get involved in that signal, it's still not too late. Just make sure to head over to my website. The link is in the description of today's video, and you can be trading in that short position within minutes. But if I just zoom out of this gold chart and look at the slightly bigger picture here, if we take this chart all the way back, let's go even further back, all the way to the 1990s. When have we actually been traded? When have we actually been trading at the same levels that we are currently right now? Well, let's have a look. It pretty much only takes us back to the financial crisis, and that was only for a very short period of time. So if I just go and put that box there you go. It takes us all the way back to September 2011. So that was when we were recovering from the financial crisis. But apart from that, gold has always been below current levels, and that's why I, still have this very bearish sentiment towards the gold prices. I really do not like gold, and if you are more of an investor and not a day trader, then I think that gold right now offers a fantastic longer term selling opportunity. I've made it very clear that my end of the year target, that being 2022, is all the way down at 15,000. I think it's very, very reasonable. A lot of people call me crazy when gold was trading up around 2,000, but I did point out it really doesn't take long for the gold markets to completely change sentiment and then all of a sudden look very bearish, as we saw at the beginning of 2021. That was in January when we were trading up at around 1930, and then within 2 months pretty much we were trading all the way down near 1650. And we've kind of seen a very similar play out here for the gold markets. In pretty much 1 month we've gone from 2070 all the way down to 1800. And I think that as we go into the latter end of 2022, we're going to see a continuation of a breakdown of gold here. I think that we'll go and test 1670, and if that breaks, then that opens up a trapdoor down towards 1500. If you're more of a short-term investor, as I know many of you are, then I think that gold, again, it's still bearish for me. I think we've broken this 0.38 fib area. We've gone and retested it as the new roof in the market. We got rejected there successfully, and now we are kind of following through down towards 1770, which is that next fib area, and then ultimately we go and test 1680. It might take a few weeks or months for us to go and test 1680 or even 1770, but ultimately I do believe we get there. One thing to be cautious of though, for those who are very bearish on gold, is that the RSI is now approaching oversold territory. So even if we did get a bounce to go and test a 200 or even a 50-day EMA, that of course It's perfectly normal. The big question is whether we can get rejected from that area. I think ultimately what we're waiting for here, guys, is that death cross where the 50-day EMA pierces below the 200-day EMA. So every day that the gold prices remain below the 0.38 fib area, which is up around 1830, that of course is very positive for the bears, as that 50-day EMA will be approaching that 200-day EMA on a very rapid pace, and we could see that more of a bearish sentiment towards the gold markets.